Have you ever thought about investing but felt held back because you didn't have a large amount of money to start? Imagine this. You only have $100, but you're ready to put it to work. Most people might think, what can I do with just $100? The truth is, you'd be surprised by how much impact even a small amount can make if invested thoughtfully. In today's episode of Monethic, we'll uncover how that $100 can open up opportunities, how you can maximize every cent, and why even small investments can grow into something significant over time. Welcome to Monethic. Today, we're diving into how you can start your investing journey with just $100. I'll be walking you through a step-by-step approach, exploring platforms, strategies, and insights that help make this small start worthwhile. By the end of this video, you'll know exactly where to put that $100, how to avoid common pitfalls, and ways to ensure you're building a habit that can grow with you. Here's the reality. Most people believe investing is only for those with thousands or even tens of thousands of dollars to spare. This misconception often stops people from taking that crucial first step. But here's the truth. It's not the amount that matters when you're just beginning. It's building the habit of investing and getting comfortable with how markets work. By starting small, you're taking your first step into a world where money can grow through smart choices. Another challenge? Many people feel intimidated by the thought of losing money, especially when they don't have a lot to begin with. But there are ways to manage risk and ways to make sure that your $100 isn't just safe, but also productive. So, let's start with some low-cost, easy access options to set you on the right path. One of the easiest ways to start investing small amounts is through micro-investing apps. Apps like Acorns, Stash, and Robinhood are popular for a reason. They take spare change or small investments and pool them into larger funds, allowing you to invest in stocks, bonds, and even diversified portfolios without needing much upfront. For example, Acorns can round up your everyday purchases and invest the spare change. Bought a coffee for $3.50? Acorns rounds it up to $4 and invests the 50 cents. Over time, those small amounts add up, giving you a starting portfolio without needing to save up large sums. These apps are easy to use, and most of them come with guides or advice on how to build a strong portfolio. Another option for your $100? Fractional shares. Traditional investing in big companies like Apple or Google used to require significant amounts. But now, platforms like Robinhood and Fidelity let you buy portions of these shares. Think of fractional shares as buying a piece of a much larger stock. You may only own a fraction of a share, but you're still participating in the company's growth. This means that even with $5 or $10, you can own a part of a major company and watch your investment grow over time. Fractional shares allow you to diversify without needing much upfront. With just $100, you could invest in 5 or 10 different companies, which helps spread out your risk. It's a great way to learn about different industries and see which investments feel right for you. ETFs, or exchange-traded funds, are another excellent choice. They're bundles of various assets, like stocks or bonds, that track the performance of specific sectors or indexes. The beauty of ETFs is that they offer built-in diversification. Instead of putting all your money into a single company, you're spreading it across multiple companies or industries. For beginners, this diversification is crucial. It means that if one company's stock drops, the others in your ETF may still hold value, balancing out your portfolio. Many micro-investing apps allow you to buy shares of ETFs with small amounts, making them accessible even if you're starting with just $100. If you're more interested in stability than high returns, high-yield savings accounts are a fantastic choice. These accounts offer much higher interest rates than traditional savings accounts, often around 2% or more, meaning that your $100 can grow slowly but steadily. Online banks typically offer the best rates because they have lower overhead costs. While high-yield savings accounts won't deliver the same returns as stocks, they're an excellent option if you're just starting to invest, and want a low-risk way to get comfortable. Your $100 will be safe and still earn a bit of interest while you're exploring other opportunities. For a bit more growth potential without jumping into stocks, consider certificates of deposit (CDs). CDs are low-risk, fixed-term investments where you agree to leave your money in the bank for a certain period, like 6 months, 1 year, or more. In return, the bank pays you a fixed interest rate, usually higher than a savings account. With a CD, your $100 grows in a stable environment, giving you peace of mind. The only downside? Your money is locked in for the term of the CD, meaning you won't be able to withdraw it until it matures without a penalty. But if you're looking for a low-risk way to let your money work for you, CDs are worth considering. Peer-to-peer lending platforms like Lending Club and Prosper offer an intriguing alternative. Here's how it works. You lend your money directly to individuals or small businesses in need, and in return, you earn interest on your loan. This option does carry more risk, as there's always a chance the borrower could default, but for some, it offers higher returns compared to traditional savings. If you're interested in a hands-on, high-risk, high-reward option, this could be a great fit. Just be sure to research the platform's terms and understand the potential risks before lending. Finally, let's talk about robo-advisors. Platforms like Betterment and Wealthfront are designed to take the guesswork out of investing. You deposit your money, yes, even as little as $100, and the robo-advisor uses algorithms to build a diversified portfolio based on your goals and risk tolerance. Robo-advisors are beginner-friendly because they manage your portfolio for you, rebalancing it as needed and adjusting based on market changes. For those who want a hands-off approach, it's an ideal way to let technology handle the details while you focus on building a habit of consistent investing. So, there you have it. 7 ways to start investing with just $100. From micro-investing apps to fractional shares, ETFs, high-yield savings accounts, CDs, peer-to-peer lending, and robo-advisors, there's no shortage of options. The best part? Every one of these options is designed for accessibility. You don't need thousands to start investing, just a desire to learn and a commitment to keep growing. If you're ready to put that first $100 to work, take a look at the options we covered today and choose the one that feels right for you. And if you enjoyed this episode of Monethic, hit that subscribe button and share your thoughts in the comments. Tell us, which of these options will you try first?